Hello there again, this is FairBinaryOptions.com. We are entering the second part of our project, how to trade the Australian dollar and Canadian dollar cross. It is moving based on the economic differences between the Australian and the Canadian economies, and of course we should look at the majors. In other words, when there is a US dollar driven event, we should be, we should know that the cross is not going to move that much. We said that out of Australia we have Reserve Bank of Australia, Bank of Canada out of Canada. They meet on a monthly basis. The interest rate statement that is being followed by a press conference, and eyes should be on commodity markets, namely on the oil market for the Canadian dollar, and on gold, palladium, copper and iron and other commodities when you are interpreting the Australian economy and of course the Australian dollar. Other than that, we are looking for news out of China when it comes to Australia. Why? More than 1/3 of Australian exports are going to China, so we are looking out of China at PMI, you are looking at GDP, you are looking at any signs of sell-off in the equity markets, you are looking at any signs of strengthening or softening of the economy, because if that is happening, then the Australian dollar is going to react. Usually important data out of China is coming over the weekend. That makes Australian dollar to open with a gap on Mondays most of the times, and a gap is being seen on Australian dollar, Canadian dollar as well. So it's really interesting to make all these correlations. Then of course we are talking about CPI. Because of commodities, inflation is not that low in Australia and Canada as well. So we are not talking about that lower level of inflation like we have in Eurozone or like we have in the United States, but especially because prices of commodities are extremely volatile. That makes that Australian dollar and the Canadian dollar are paying a bigger interest rate than the other currencies, and this is why being long on Australian dollar, US dollar, or being short on US dollar and Canadian dollar is a trade that attracts a lot of traders. So look for the CPI with the mandate of 2% on each and every central bank. Look also for GDP. GDP, you know, gross domestic product, stands for the total value of goods and services, so the GDP. And this GDP, the bigger the better, the bigger and a more positive surprise, the more positive the surprise of the GDP, then the likelihood that the central bank is coming to increase their rates or to hike the rates or to talk bullish the currency is going to be raised. Then of course look at housing data. Housing data like the home sales or the building permits, they are telling much of an economy that is still influenced by commodity markets. And we know by now that both Canada and Australia have vast territories and little population when compared with the territory, so the housing market is really important as well. Look also for retail sales and jobs data out of both Canada and Australia. Retail sales and jobs data. This would be, I would say, the most important economic releases that are influencing market. But on top of the list should be the central bank, and on top of the list should be US dollar driven event. Whenever you will have a US dollar driven event, chances are that the market is not, or the cross is not going to move. So whether you are trading boundary options or you are trading one-touch options would be far more interesting than trading high-low with a short-term expiration date. Thank you and have a great day.